Hello, everyone. Welcome to the market opening bell on Wednesday, October 8th, your 10-minute guide to the stock market. Hong Kong Interbank offered rates HIBOR generally rose with 1 month HIBOR exceeding 3.58%. Hong Kong stocks performed weakly on Mid-Autumn Festival Day, Monday, with the Hang Seng Index opening 137 points lower, briefly rising 4 points to 27,145, then falling back, dropping as much as 267 points to a low of 26,873. It closed down 183 points or 0.7% at 26,957. The Hang Seng China Enterprises Index fell 84 points or 0.9% to 9,573, while the Hang Seng Tech Index dropped 72 points or 1.1% to 6,550. Total market turnover fell to 121.2 billion Hong Kong dollars. Without support from mainland Chinese investors southbound trading, the Hang Seng Index fell to hold above 27,000. It is expected to remain contested around this level until southbound trading resumes on Thursday, with short-term support at 26,800. On the market, cheap stocks bucked the trend, with Hua Hong rising 4.6% to 91.5 Hong Kong dollars. SMIC up 0.2% and cheap equipment stock ASMPT gaining 6.4%. Fundamentally, China's expanding AI ecosystem presents opportunities for semiconductors. AI-related sales are projected to grow from zero to over 25% of the market within 5 years. Global semiconductor sales are expected to rise 16% to a record $731 billion in 2025, driven entirely by price increases, with shipment volumes still 11 below their peak, indicating low inventories and ample growth potential. Although valuations for related stocks are high, the high growth rate driven by AI justifies these valuations. Cathie Wood, dubbed the tech stock goddess, and her ARK investment fund increased their Baidu holdings for 4 consecutive days, accumulating over 122,000 shares. As of October 6, ARK held 554,000 Baidu shares. Earlier this year, Cathie Wood's Big Ideas 2025 report highlighted that China and the US are leading the trend in autonomous robotaxis. She noted in a related program that a decade ago, she expected autonomous driving to be achieved by several companies, but only 3 have successfully implemented operations, namely Waymo, Tesla, and China's Baidu. On the corporate earnings front, Sasa International announced that for the second fiscal quarter, from July 1st to September 30, 2025, group revenue reached 1.031 billion Hong Kong dollars, up 8.4% year-on-year. Offline sales amounted to $826.3 million, up 9.4%, accounting for 80.2% of total revenue, driven by Hong Kong, Macau, and Southeast Asia, namely Malaysia and Singapore. As of September 30, 2025, the group operated 157 offline stores, 2 more than the previous year. Online sales reached 204.5 million Hong Kong dollars, up 4.9%, representing 19.8% of total revenue, driven by proprietary e-commerce platforms and third-party online platforms in mainland China, Hong Kong, Macau, Southeast Asia, and other regions, maintaining steady growth. For the company Chang Feng Pharmaceutical, stock code 2652, that will be listed today, its Hong Kong public offering was oversubscribed by 6,697.8 times, with a 1% allocation rate for one lot, 500 shares. The international offering was oversubscribed by 12.74 times. On Monday, it closed at 46.9 Hong Kong dollars in Phillip Mass Grey Market, 218% or 32.15 Hong Kong dollars above the listing price. Excluding fees, a 500 share lot would yield a paper profit of 16,075 Hong Kong dollars. The US government shutdown continued into its second week, with US stock market showing mixed performance on Monday, driven by a surge in AI market mergers and acquisitions. The S&P 500 and Nasdaq closed at record highs. The S&P 500 rose to 24 points or 0.4% to 6,740 points. The Nasdaq gained 161 points or 0.7%, closing at 22,941 points. Influenced by declines in Home Depot and Sherwin-Williams, the Dow Jones Industrial Average fell 63 points or 0.1% to 46,694 points. The small cap Russell 2000 index hit a new high on Monday, surpassing 22,500 points for the first time, closing up 0.4% at 2,486 points. AI company OpenAI reached an agreement with AMD, under which OpenAI will hold up to 10% of AMD's shares, and the two will engage in a long-term partnership to deploy AI chips. AMD stock surged 23.7% on Monday. Under the agreement, OpenAI will deploy a total of 6 gigawatts of AMD Instinct GPUs in phases over the coming years, with the first 1 gigawatt of chips to be activated in the second half of 2026. As part of the deal, AMD will issue up to 160 million ordinary share warrants to OpenAI, with vesting tied to deployment progress and stock performance. If OpenAI fully exercises the warrants, its stake will reach approximately 10%. Financial details were not disclosed, but OpenAI stated the collaboration is worth billions of dollars. NVIDIA, AMD's main competitor in the GPU market, saw its stock fall 1.1% on Monday. On Tuesday, all three major US indexes declined. The S&P 500 fell 25 points or 0.4% to 6,714 points, ending a 7-day winning streak. The Dow dropped 91 points or 0.2% to 46,602 points, while the Nasdaq fell 153 points or 0.7% to 22,788 points. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, dropped 197 points or 2.2% to 8,640 points. Concerns arose over the feasibility of Oracle's plan to purchase billions of dollars in chips from NVIDIA for a rental program, with potential profit pressure or losses, leading to a more than 2% drop in Oracle stock and a 0.3% decline for NVIDIA. Reports citing internal documents stated that for the quarter ending in August, Oracle's NVIDIA cloud business generated $900 million in sales with a gross margin of only 14%, far below its overall gross margin of about 70%. Due to high NVIDIA chip prices, Oracle's aggressive low-price strategy in AI chip leasing may squeeze profit margins. Tesla held an event on Tuesday with its stock rising 5.5% on Monday. As expected, the company launched affordable versions of the Model Y and Model 3 priced at $39,990 and $36,990 respectively, and released updates to its autonomous driving assistance technology. On Tuesday, Tesla's stock fell 4.5%. According to the company's website, the affordable Model Y has an estimated range of 321 miles, about 10% lower than the higher-end version, and lacks a second-row touchscreen with fewer speakers than the previous model. Dell Technologies raised its full-year revenue forecast, boosting its stock by 3.5%. Meanwhile, IBM reached an enterprise-level AI software collaboration agreement with Anthropic, with its stock rising about 1.5%. After surging nearly 24% on Monday, AMD gained an additional 3.8% on Tuesday. Federal Reserve data showed that U.S. consumer credit grew by $360 million in August, significantly lower than the revised $18.1 billion increase in July and well below market expectations of $13.1 billion growth. This marked the slowest credit growth in 6 months, primarily due to a decline in credit card balances. Revolving credit grew at an annualized rate of 5.5%, while non-revolving credit, including auto and student loans, grew at a slower 2%. Overall, seasonally adjusted consumer credit grew at an annualized rate of 0.1%, indicating a significant slowdown in borrowing activity. According to Real Clear Markets TIPP data, the U.S. Economic Optimism Index fell to 48.3 in October, the lowest since May and below market expectations of 49.3. The index remained below the neutral level of 50 for the second consecutive month, reflecting persistent consumer pessimism. Our stock pick today is Tiangong International, stock code 826. Tiangong International is primarily engaged in the production and sale of die steel, high-speed steel cutting tools, and titanium alloys. The development of humanoid robots in China is expected to drive increased demand for high value-added high-speed steel. It is estimated that the domestic robot market could reach a scale of 10 trillion yuan by 2045, and the rising trend of localization in key components for humanoid robots will further trigger structural demand growth for related materials. This demand mainly stems from the specific requirements for lightweight and high-strength steel in the core structures of humanoid robots, including components such as framework, joints, and drive systems, which will drive the development of high value added steel product matrices. Although the overall proportion is not high, the niche market for high value added steel will become a significant growth point for high-end material companies. For specialized high value added steel, Tiangong International leverages its proprietary powder metallurgy smelting technology to independently develop a key product, high nitrogen alloy material, TPMDC02A. This product is used in the production of planetary roller screws, one of the highest value components in humanoid robots, marking a significant breakthrough in the localization process for high nitrogen, high strength, corrosion resistant alloys. The group's powder high speed steels, TPM 330 and TPM DC 31, offer excellent strength and wear resistance, making them suitable for high precision transmission structures such as screws and tools with substantial market potential. Due to its superior corrosion resistance and high strength, high nitrogen stainless steel is a critical material for multiple industries experiencing growing demand. In the first half of 2025, driven by strong demand from key industries such as new energy vehicles and consumer electronics, the market size for high-end tool steel in China has grown. Among these high-end products like powder metallurgy die steel have seen increased market penetration in high-end applications due to their superior comprehensive mechanical properties, with significant momentum in market demand growth. The group also foresees that high-end titanium wire will benefit from the transformation of multiple industries from low-end to high-end and the increase in downstream demand. In 2025, the main drivers for the high-end titanium wire market include sustained growth in downstream demand, particularly in expanding applications in aerospace, medical, automotive, and computer communication and consumer electronics 3C sectors. The titanium industry is moving toward high-end development with continuous optimization of processing techniques and gradual cost reduction. At the same time, the high concentration of the titanium processing industry is conducive to enhancing product value addedness. In March 2025, the group completed the second phase of its EP furnace project aimed at increasing the recycling rate of titanium alloy scrap, successfully casting high-quality titanium ingots through hot testing, further strengthening the group's competitiveness in seizing opportunities in the global high-end titanium and titanium alloyed market. Recommended buy price $2.80, target price $3.20, stop loss $2.65. I do not hold the aforementioned stock.